Shelli, thank you again for being here and welcome back.
You bet.
Yeah. Thought in this segment we could talk about one that probably raises the old blood pressure a little bit. But
a little.
Could we talk about people changing insurance carriers and maybe some of the risks that are involved in that?
Sure. So we talked a little bit about in the first segment about the tail exposure that we have and the statute of repose and the 6 years that we have to deal with. For instance, when someone goes out of business, right? So you have these occurrence policies and the policy only covers occurrences that happen during their policy term. So when you change carriers, now you've left a gap because you have all of this prior work that you've done that you can have occurrences from.
True.
Here, and now you go to a new carrier and because your premium is based upon production, they aren't receiving any premium for that. But there are 6 more years that you can be sued for it. So when you change carriers, it's always going to be cheaper because they're only going forward.
Right.
So I have clients call me all the time, oh, I got a lower quote. And I'm like, of course you did. Go call them back and ask if they're covering your prior work. And they call me back, oh my God, they're not. And I'm like, right. So as long as things are consistent and your current carrier isn't all of a sudden deciding to put a lot of exclusions on and making it impossible to work with or something like that, it is best always to stay with the same carrier because you're keeping that continuity of coverage. So you want to work your way through it if you possibly can. So changing carriers is a risk. And if you do have them pick up the prior work, most people change carriers because they want to save money. Let's get real, right? That's the objective. So then if you have the new carrier and is willing to pick up your prior work, what they're going to want is all of your, each by year, all of your projects, sales, payrolls, everything else. And they're going to go back and they're going to calculate what they would have charged you for that based upon the rates they're giving you. And they're going to charge you 30 to 50% of the premium that would have been for that. But you've already paid for that with the first carrier. It just kills me because the competing agents do that by design. They just don't say anything about it because they're trying to win the business, but they've really left a gaping hole. And it'll be listed on the quote and everywhere else that you're having somebody sign off on, but they don't understand what that means. And it's a huge deal. The prior works, or they'll call it continuous and progressive or something that manifested or could manifest from something prior. There's all sorts of sneaky language on the forms, but it's always there.
So it sounds like it's likely most contractors are making this move in the name of a financial savings, not necessarily understanding that they've got a gap there that they're going to be basically on the hook for themselves. And
exactly. I mean, who changes carriers? It's a hassle unless they're trying to save money or they're trying to, there is reasons. Maybe it's an improvement in coverage. I move people a lot but then I negotiate that prior work in there and figure out how to make it financially make sense, but I don't leave them hanging. Or sometimes maybe they just haven't been working for a while and they assume the risk. They understand that's what they're doing, but you must explain that to the client so that they understand they're assuming that risk. Say maybe they've been in somewhat of a hiatus or only done customs for, the last however many years and they've bought full-blown warranties. There might be a reason, but for the most part, there's not.
Okay. Could you talk about the definition of completed operations and how that comes into play when somebody changes carriers?
Okay, along the lines of what I was talking about. So completed operations, people call it construction defect coverage. It's not construction defect coverage. It's damage from construction defect coverage. It's the resulting damage, the nail in the wall, the water damage it takes out the side of the house. It's going to cover that because it's the resulting damage from what happened to the structure. So when we talk about resulting damage, a good way to explain it that people can get the visual about is like an electrical panel. So some electrical panel was installed improperly and it blows up. They're not going to pay for the electrical panel because it's the thing, it's the defect, but the damage it did, everything surrounding it is covered. It's the resulting damage from it. So it's a completed operation versus there's the two sides of the policy. During construction, your premises liability, if you own the premises of the job site, and then your operations of conducting the work and somebody getting injured or damaging something else during that time. And then your completed operations is after construction. So I would say during construction, after construction, right? So after construction, you have that 6-year window that you can be sued, and that's your completed operations coverage because it's completed, but you have the risk.
It sounds like in general, it's not a great idea to change carriers unless you have to, but isn't it sort of prudent to check the market every 3 to 5 years just to,
sure,
for the sake of checking? And if so, how do you do that responsibly?
Well, I call it pick your pony.
Okay.
People want to call a bunch of different agents, and that's basically the absolute worst thing that you can do.
Okay.
There's only so many carriers that cover, especially right now, we're in a really hard market where availability is down and what you can get for your money is slimmed down. The options, you don't get as much for your money right now anyway, and very few places you can go for it. Okay. But keeping in mind that every time an application goes into an insurance company, you're logged into that insurance company, and then they track that. So the next year they get it, and the next year they get it. They say, oh, we've seen this account 3 times, and you've just automatically declined yourself because they're like, well, and especially if they see it from different agents, they look at loyalty.
Yeah.
Are you shopping every week? There's some contractors around town that we all just laugh. I know when I was underwriting, we'd see the same one every year. And then now that those same people call me and I'm like, no, thank you. So they're not loyal. They're going to shop me the next year and go with the lowest price, not taking into consideration exclusions like prior work. They're not listening. So we don't want clients like that.
Okay. I think you answered my next question. It sounds like the carriers have quite a level of visibility into all this.
Yeah. It's a small world. Okay. Just like all the contractors know each other, we all know each other. Okay. And you get a reputation for shopping, and that is bad because then say your carrier decides to stop writing contractors, and now you need those markets, and now they aren't interested in you. And if they do write it, they're just going to mark it up because they've got you. They don't, they know you're desperate.
Okay.
So you have to rely on a good agent. That's the pick your pony part of making sure you get with a good agent or broker that knows the market and knows when the right timing is. Yeah. Sometimes I'll just call up and not make formal submissions, but just call up my underwriters and just have a discussion with them about it and see if it makes sense to submit it so that it's not getting glummed up. And honestly, you're giving everybody your sales costs, payrolls, your financial statements, social security numbers, everything that goes into making a submission. Do you really want that all over town?
Yeah. I thought we could wrap up this segment with this question. Aren't all carriers created somewhat equal?
Oh, no.
Oh, no.
No.
Oh, no.
There's notorious ones that come in and out of market, and because of the 6-year statute of repose, they're opportunists, as I call them, and that they know that you're desperate. They'll write policies that are very slim coverage. They'll write them for 2 to 3 years. And what they're doing is they're minimizing their risk. And then they'll start saying, we're not writing contractors anymore. So now they've collected a whole bunch of money. They've got a kitty. And then they see the fallout, and if it goes well, they'll try it again, and they'll just keep doing that. But they're managing their tail exposure by doing that. It's a known risk, and then it leaves you with a hole. Now, solvency of the carrier, we have the AM Best rating system, and there's several others, but that we can look at in the Treasury to make sure that carriers are solvent. So what happens a lot when carriers don't get solvent, are losing their financials, is they start writing a lot of business, just like anybody would, right? You got to bring money in fast, and so they'll get really hungry. And that's a bad sign. We look at that as, oh boy, are they in trouble, right? I mean, that's the instinct, right? So, now they're offering all this good stuff. That a lot of times will mean they're going out. If your carrier goes bankrupt and you're now shopping, that's a terrible thing, because the next carrier, now they might want to exclude all your prior work and all that, but you don't have a carrier back here that's going to pay for anything. So
you have to find somebody that will do it for you, right?
Right.
You should.
And it's going to get real expensive for you. Yeah. So, anybody can look on the Labor and Industries website, which I highly recommend anybody who's hiring anybody to do, and it'll show your whole history of all your insurance companies. And that's what an attorney does. And they'll name every single one of them in a lawsuit. So if you're the last man standing, you're going to be defending your exclusions, and then the court system is going to feel sorry. The consumer. Washington is such a consumer-friendly state that they'll just say pay the guy anyway, right? So they don't want to write you because they know there's nothing behind you to pay for anything.
So the predatory practices of some of these carriers, does our state insurance commissioner keep an eye on that and sue some of them, or try to balance the ship?
So our insurance commissioner only regulates the carriers that are what we call admitted in our state. So Then there is what we call surplus lines carriers. Those carriers aren't licensed to do business in our state, and they have free reign. They could say anything in their policy. We don't cover you if you work on Tuesdays, and they can get away with that because they aren't regulated. So those are the policies. When you see taxes and fees on them, that means they're surplus lines. A lot of contractor insurance, because it's considered high risk, is surplus lines. Our insurance commissioner can do nothing. So there isn't any regulation on it, basically. Well, there's a slim, but most of those are offshore. They're Bermuda or Portugal or whatever based companies. So good luck,
okay.
right?
Oh, yeah. Okay.
Good luck with that. So you want to be with an admitted company that then is regulated, and their forms are regulated. They have to file their forms, that the exclusions and things that they put on the policies. So we as brokers then we know what to expect. If they say they're going to put this form number on there, we can look it up and it's going to say that every time, and they can't modify it. Where the surplus lines companies, they can take that form number and they can change one word. A knot, taking out a knot or putting a knot in can change everything. You kind of get numb to it, right? You're used to seeing these forms. Slipping in a knot, I mean, anybody can miss that. So you got to really watch for things.
Okay.
There are certain areas of the policy I know when I'm looking at a policy, I go right to the trigger points and things that, conditions in different places that I know are specific places or in the definitions. That's where they take away your contractual liability, restating things. So there are places to look, and you have to be super careful with those. And there's nothing we can do.
Okay. So it sounds like at the end of the day, it's not a great idea to change carriers if you don't have to for some reason.
Right.
In a perfect world, have your agent broker set you up with admitted carriers if your business model allows it, and things like that.
Yeah, some contractors don't have a choice. The core trades, the envelope trades, ripper, framers, typically don't have a choice. Concrete guys, some, depends on the type of concrete. Flat work, sure. Foundation, right? So and then have to keep in mind as well, and when you're choosing an agent or a broker, is that we sign contracts with the different insurance companies, and we have to, as a commitment, usually give them a certain amount of premium. So there's some leverage there that we have. Like if you have a broker that works with the same carrier a lot, they have some clout with that carrier. It can get a lot further. And you should always ask for a marketing summary. Who did you go to and why did we not do that? So that you're involved in that process. Too many contractors, they just have somebody fill out the questionnaire in their office. They don't even check, all those yes/no questions. You're warranting you do or don't do those things.
Yeah.
And then they're just signing something and they don't understand it and haven't read it. And, pick up the phone, call your agent, have them talk you through it. Have them come in and talk you through it so that you understand. You don't have to read every word, but you should understand.
Again, fabulous information. Thank you.
You bet.